Hey, this is Phil from the Next Chapter team, and welcome to another ETF review. Today's ETF review is going to focus on some funds from the Dimensional Fund Group. For each ETF, we're going to go over various items like fund category, performance, and overall what's driving the ETF. But before we jump into the review, please take a moment to like, subscribe, and share. Help the channel grow. Now, sit back, relax, and get ready for another ETF review from the Next Chapter team. Before we jump into the review, we're going to do a quick recap on what an exchange-traded fund is and ETF is, and how do you buy them. Today's fund review will focus on the Dimensional US Equity ETF, DFUS, and then DFAT, which is the Dimensional Target Value ETF. What is an ETF? An ETF, well, is basically a basket or a big group of investment securities that trade on the stock market. And because they trade on the stock market, the key word there is trade, and they trade all day, their price changes throughout the day. Now, ETFs tend to have low expense ratios and fewer brokerage commissions than some of its competing products. Typically, what we're referring to here is mutual funds. Now, how do you buy an ETF? Well, it comes down to a couple things. First off, determine the type of account, whether it's going to be an IRA or a brokerage account. An IRA is an individual retirement account. And why do we call it an IRA or brokerage account? Because usually, unfortunately, ETFs are not available in 401ks. Now, some employers are moving in that direction, which is great. I love to hear that companies are giving employees opportunities to make low-cost investing throughout part of their retirement planning. Now, next you move on to opening up an investment account. And then from there, you decide on how frequently you're going to invest, whether it be weekly, bi-weekly, or even monthly. And don't forget probably the most important step, number 4, you set up those transfers to be automatic and those purchases to be automatic. That automation will help you over the long run because life factors will come up. But as long as you budget for it and you make it automatic, these transfers and purchases, you'll continue to build wealth automatically. And that's really key. Taking the human element out of it and making this as systematic as possible to help you build wealth over the long term. Now, here's just a quick list of some investment brokers out there. There are so many. Do your own research, figure out the one that works for you. But you have companies like Fidelity, Webull, M1 Finance, Charles Schwab, E-Trade, TIAA, CREF, and Vanguard. Now, for each ETF, we're going to do a quick review of the ETF category, fund benchmark, fund summary, expense recap, top holdings, and then finally the fund performance. That information is going to help us take a look at what an account would look like if you invested consistently over a good course of time. All right, now, again, we're looking at DFUS. This one is the Dimensional's US Equity ETF. This one's a large blend. This one seeks to track against the Russell 3000 index. And because it's an index that is broad, you can clearly see the expense ratios is crazy low. Look at that, 0.09. So that means for every $10,000, it is $9 of expenses annually for this ETF. Now check it out. Look at how many companies you get here. You get 2,498 companies in this ETF. And what sectors do you have? A large position in technology. Information technology makes up about 31% of this ETF. Financials make up 13.29%. Healthcare about 11.6%. And consumer discretionary 10.47%. And then industrials 9.54%. And then everything else is lumped into other at 23.66%. Now you're probably wondering, what company is in there? Well, this is what I love about doing these reviews. You get to go under the hood. And so the top equity positions, so the top companies you have, usually the top 10, you got Microsoft, Apple, NVIDIA, Alphabet Inc., Amazon, Meta Platforms, Berkshire Hathaway, Eli Lilly, Broadcom, and finally JP Morgan Chase. Now let's see what that performance looks like. So you've got a 1 year of 23.84, a 3 year of 9.18, a 5 year of 14.78, a 10 year of 12.43. And since inception, if you were one of those persons that bought this fund right at the very beginning, 9.77. Next up, we have the Dimensional US Target Value ETF. This one is a small value or even a small blend. This one is working to track against the Russell 2000 Small Cap Index, which has an expense ratio of 0.28. So it gives you for every $10,000 about $28 per year. Now, how many stocks do you have for this? You have positions in about 1,487 different companies. That is phenomenal. It's a true blue index right there. Now, let's take a look at what sectors you have in play here. You have sectors such as financials at 27.51, industrials roughly 17%, Consumer discretionary is rounded up about 15, energy 11, materials 8, and then finally others are lumping everything else in about 21.58. Let's take a look at those positions. What companies do you have? You have HF Sinclair, Chesapeake Energy Corp, TD Synex, Ally Financial, Arrow Electronics, Knight Swift Transportation, Jones Lang LaSalle, and Taylor Morrison Home Company. Phenomenal. Good mix of companies. But now let's take a look at how you performed. You have a 1 year of 13.52, 3 year of 6.59, 5 year of 11%, and 10 years of 7.79. And since inception, if you've held on, you bought this early on, 9.83. Been a pretty interesting ETF right here, and I can't wait to see what it looks like. Overall, let's move into the next section. What do we do here? We take a look at what it would look like if we invested consistently in both funds over 5 and 10 year span of time. I'm excited to see what the results will be. Okay, for today's example, we're going to have someone investing $8,500 per year annually. And again, as a reminder, we have two dimensional funds. We've got the first one, DFUS. First 1 year, 23.84, 5 year, 14.78, and 10 year at 12.43. Next up, we have the dimensional target value ETF. This was DFAT, and then 1 year of 13.52, 5 year of 11%, and then a 10 year of 7.79. I think it's going to be really interesting to see what it would look like if you invested consistently. So again, 1 year is just 8,500. Now let's jump into seeing what it would look like if you invested for 5 years. All right, 62,000. All right, let's jump into it. So 62,000. Invested cash is 68% of your balance, and that is 42,500. And then the growth on that would make up about 32%, or $19,600. So again, the 62,000 is broken up between principal, 42,500, and the remaining 19,600 is all growth. Now let's see what that 10-year return looks like. Let's see how we do. Awesome, we broke 150, love it. All right, so what would it look like? So 10 years, 8,500 per year, $85,000. So that's 56%, almost a little over half of your balance is all your investment. The rest, $66,000 in growth. So again, one more time, $66,000 in growth on this account if you invested consistently in just two different ETFs. Now, there are a lot of options out there. Of course, do your own research. This is just giving you an example and inspiring you to manage your money well and put yourself in a position to invest consistently. Hope you enjoyed the ETF review. So many more to come. Have a great day.
Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here. And please enjoy and see you in the next video.